Imagine discovering financial secrets that most people are unaware of, strategic paths that can increase your investments and significantly reduce your taxes. These methods, far from being privileges of the wealthiest, are within your reach with the right guidance. Although this conversation may generate controversy, what you are about to learn is an ethical and entirely legal approach to optimizing your finances. Number 1. Reinvest profits. When it comes to leveraging business growth, reinvesting profits is one of the most effective and well-known strategies. Instead of distributing earnings to shareholders or owners, choosing to reinvest these resources back into the company can significantly boost development and long-term sustainability. For example, imagine a technology company that decides to reinvest its profits into research and development of new products. This investment not only enhances the quality and innovation of the products offered, but also increases competitiveness in the market. Additionally, by reinvesting profits directly into the business, the company can avoid taxation on these earnings, allowing for more robust growth without the burden of taxes. Adopting the strategy of reinvesting profits not only strengthens the company's financial structure but also demonstrates a commitment to continuous growth and operational excellence. This approach paves the way for future opportunities and sets the stage for the next strategies we will discuss. Number 2. Make donations to charity. When we talk about smart financial strategies, making donations to charity emerges as one of the most elegant and effective. In addition to contributing to noble causes, this practice offers significant tax benefits, allowing entrepreneurs and companies to align their financial goals with social responsibilities. It is a way to positively impact society while optimizing the tax burden. For example, a company that decides to donate part of its profits to an educational foundation not only promotes education and community development, but can also take advantage of substantial tax deductions. These deductions reduce the taxable income base, resulting in lower taxation on the company's profits. Additionally, by associating the brand with philanthropic initiatives, the company strengthens its reputation and creates a deeper bond with its customers and stakeholders. Adopting the practice of making donations to charity goes beyond tax benefits. It is a demonstration of commitment to social values and sustainability. This strategy not only alleviates the tax burden, but also promotes a positive and responsible image of the company in the market. By combining generosity and financial intelligence, this approach sets the stage to explore other tactics that complement the sustainable growth of the business. Number 3. Use tax havens, offshores. When the topic is tax optimization, using tax havens or offshores often comes up as a sophisticated and, at times, controversial strategy. Essentially, this approach involves transferring financial resources to jurisdictions with more favorable tax regimes, allowing individuals and companies to significantly reduce their tax burden. Although the practice may seem complex, it is widely used by large corporations and high-net-worth individuals seeking to maximize their profits in a legal and efficient manner. For example, a multinational company might establish a subsidiary in a tax haven like the Cayman Islands or Monaco. In these locations, corporate income tax rates are extremely low or even non-existent. This means that the profits generated by this subsidiary can be reinvested in the business or distributed to shareholders with a much lower tax burden than if they were kept in the home country. Additionally, these jurisdictions often offer financial secrecy, protecting the identities of owners and capital movements, which adds an extra layer of security and privacy for investors. Adopting the strategy of using tax havens is not just about reducing taxes. It is also a way to diversify assets and protect wealth against economic and political instabilities. However, it is essential that this practice is conducted within legal boundaries, avoiding issues with international tax authorities. With careful implementation and proper legal advice, using tax havens can be a powerful tool to optimize financial efficiency and ensure the long-term sustainability of the business. Number 4. Move to low-tax countries. When it comes to advanced tax strategies, relocating residency to low-tax countries is one of the most discussed and effective tactics. This approach involves moving fiscal residency to jurisdictions where income tax rates are significantly lower or even non-existent. Although the idea may seem drastic, it is widely adopted by individuals and entrepreneurs seeking to optimize their tax burden in a legal and efficient manner. For example, considering a move to cities like Dubai or countries like Monaco can offer substantial tax benefits. In Dubai, there is no personal income tax, meaning all earnings remain intact. Monaco is famous for not taxing income for residents, attracting an international elite seeking to preserve their wealth. In addition to tax benefits, these destinations often offer a high quality of life, security, and first-class infrastructure, making the transition not only financially advantageous but also comfortable and attractive. Choosing to move to a low-tax country not only reduces the tax burden but can also provide greater financial flexibility and freedom to invest in global opportunities. However, it is essential to consider aspects such as local legislation, residency requirements, and impacts on personal and professional life before making this decision. With careful planning and appropriate consultancy, this strategy can be a significant step toward tax optimization and the sustainable growth of wealth. Number 5. Deduct business expenses. When it comes to optimizing the tax burden, deducting business expenses is a widely used and effective strategy. This approach allows companies and entrepreneurs to reduce their taxable income by accounting for expenses related to business operations. It is a common practice that not only alleviates the tax burden but also promotes more efficient and transparent financial management. For example, a company can deduct expenses related to the acquisition of vehicles used for business purposes, business travel expenses, investments in technology, and even costs related to marketing and advertising. Suppose a consulting firm purchases new software to improve operational efficiency. This investment can be deducted as a business expense, reducing the taxable income base. Additionally, expenses for employee training and development are also eligible for deduction, encouraging professional growth within the company while benefiting from tax incentives. Adopting the practice of deducting business expenses goes beyond simple tax reduction. It is a demonstration of good financial governance and strategic planning. This strategy not only improves the company's financial health, but also frees up resources for reinvestment and innovation. With careful management of expenses and an understanding of tax regulations, deducting business expenses can be a powerful tool to increase profitability and ensure long-term sustainability. Number 6. Receive payment in equity. When it comes to advanced compensation strategies, receiving payment in equity, also known as equity compensation, is an increasingly common practice, especially among executives and high-level professionals in large companies. Instead of receiving a traditional salary, individuals opt to receive part of their compensation in the form of company shares. This approach not only aligns the interests of employees with those of the company, but also offers tax benefits and potential significant financial gains in the long term. For example, imagine an executive at a tech startup who receives part of their salary in company shares. If the company grows and the value of the shares increases, this executive could profit substantially when they decide to sell their shares, often paying taxes only at the time of sale and not when receiving the shares. Additionally, this type of compensation can encourage employees to dedicate themselves more to the company's success, as their own wealth is directly tied to the company's performance. Large corporations like Google and Apple frequently use this strategy to attract and retain talent by offering compensation packages that include shares as a significant part of the total remuneration. Adopting the practice of receiving payment in equity goes beyond tax benefits and potential financial gains. It is also a way to actively participate in the company's growth and success. However, it is important to consider the risks involved, such as stock market volatility and dependence on the company's performance. With adequate financial planning and a clear understanding of the terms of the offered equity, this strategy can be a powerful tool to maximize earnings and strengthen commitment to the company's development. Number 7. Send money abroad. When it comes to advanced financial strategies, sending money abroad is a widely used tactic by individuals and companies seeking to optimize their tax burden and expand their operations globally. This approach involves transferring funds to accounts or entities in other countries, where tax rates may be more favorable or where there are incentives for foreign investment. Although this practice may seem complex, it offers a range of benefits for those who use it strategically and legally. For example, a company might choose to transfer part of its profits to a subsidiary in a country with lower taxes, such as Ireland. This not only reduces the company's tax burden on profits but also facilitates expansion into new international markets. Additionally, high-net-worth individuals can transfer part of their wealth to offshore accounts, taking advantage of benefits like greater financial privacy and asset diversification. It is important to note that these transfers must be carried out in accordance with international laws and regulations to avoid legal complications and ensure tax compliance. Sending money abroad is not just a way to reduce taxes. It is also a strategy to diversify investments and protect wealth against economic and political instabilities in the home country. However, it is essential to seek specialized legal and accounting advice before implementing this strategy, ensuring that all transfers are conducted legally and transparently. With careful planning, sending money abroad can be a powerful tool for financial optimization and the global expansion of business or personal wealth. Now, the question remains, are you ready to apply these strategies and transform your relationship with taxes? Imagine the positive impact this change can have on your financial life and your personal and professional projects. Subscribe to our channel. Thank you for watching and see you in the next video.